Hey guys, in this video I'm going to try to talk real fast because of the Roku charts that I'm trying to review and reveal the Roku trade at the very end of this video. For now, I want to describe the 5 signs that the market is about to make a pullback. Sign number 1, the market delay effect. This is some crazy stuff that's happening. So apparently we're making fun of the no deal situation, the good favorable circumstances, everybody believes in it, keeps moving the market higher, but today, we get an announcement that, hey, there is no deal until December. And the market is like completely asleep, like nothing is going on, right? Sideways, 6 points lower, 6 points higher, 6 points lower, 6 points, nothing, no freaking reaction. So this is what's about to happen in a few days because I've seen it happen in markets times and times over and over again. So this delay effect is going to play out in a few days where all of a sudden the market is like going to wake up and you're like, hold on a second. Did they just a few days ago, did they like say there was going to be no deal? Hold on a second. I thought we had a deal. Trump said we had a deal. He just said he had to sign it later. And apparently now they're not signing it. So now he's saying he's going to sign it in December. Okay, so we do have a deal. But holy shit, that means we never had a deal in the first place. And you're going to see the market do this. Okay, so we possibly expect this to happen this Friday, possibly Monday. So the cool thing about it is the put options are super cheap and you can buy them literally super cheap right now and capitalize on a downside. So sometimes your profits on the options really amount to how much you actually pay for them in relation to how much you actually sell them for. So with that said, observation number 2 for the day, SoftBank CEO, I can't believe he actually inserted this slide in his presentation today. He actually did come out and say, hey, this is the first loss in 14 years in the history of SoftBank. And he said this is a quote, we are in rough waters. And he had this picture in his slides in the presentation. Guys, this is a sign. And the market, again, delay effect, no freaking reaction. Third day divergence between VIX and SPX. For the last 3 days, we've been paying very close attention to these developing divergence between VIX and S&P. As you know, S&P has steadily been climbing, hitting record highs, but so has the VIX. And the VIX has not broken out yet. As a matter of fact, it looked like it was hitting the double, triple bottom right here. And it looks like it was going to be a side trend, and it's still in this low level between 12 and 14 range. So we're not expecting anything crazy to happen unless the VIX breaks above 14.8, 14.9 area. But nonetheless, this is a definite sign that a huge pullback could be coming. How huge? I'm going to show you on the chart at the very end of this video. Now, great companies failed to extend gains after great earnings. We've seen it with Facebook. We've seen it with Apple. We've seen it to where they beat it on pretty much every metric out there, beating analyst expectations. And they failed to rally substantially. Typically, both of these stocks would be up substantially higher, but they're not. Intraday, they're selling off. People are taking profits. You know, Amazon drops to 1650. They pick the stock up and now struggling back around these areas. So nonetheless, I mean, the earnings in Amazon, they weren't horrible. Okay, yeah, it missed one matrix. So did Google. Actually, Google had a stellar quarter and is still struggling to close above 1,300. Yesterday got to like 1,298 and got shot down again a little bit. So all of these really great companies, after reporting what appears to be really great earnings, with the exception of a couple of hiccups, they are having a really hard time making substantial moves higher. That is definitely not a good thing. The one key sector that has been leading the entire market higher is the financials, which typically doesn't last. The rally in financials typically stalls out. We have not seen a crazy rally in financials like that in a long time. And the important thing about this rally is stocks like BLK and Goldman, they all hitting some very serious resistance levels. That's why we're saying this rally in financials is about to reverse. What else is about to reverse, guys, is oil. Oil still in bearish trend. So all the reasons that we've shared with you in October, basically the idea if the oil market was to sell off at a rate of change besides showing this sideways trend, in a way, if it was to have a sharp sell-off, the markets will react. Now, the danger of this actually happening now is not apparent to most of the market participants because overall, the chart looks bullish lately. But if you actually glance on the chart, you're still in this death cross formation. You got the head and shoulder going on. So, and you're against a very major resistance level right here, about 57, 58 bucks. tried to get above that level twice in the last couple of days and it failed. So expect a reversal in oil despite this bullish momentum going on. It's also confirmed while the bullish momentum has been happening lately, it's been happening on diminishing volume, which is basically diversion on the volume side, tells us oil short term will be dropping. The question is not necessarily whether it's going to drop, but at what type of speed, what type of rate of change we're going to see here in oil. So if all of a sudden we get a sharp reversal, get back to 53, close to 52 level, all eyes are going to be right here again. Are we going to break this multi-month support level around 51.50, 52 area? If we are, guys, the market will reverse. There's no doubt about it. So downward trend in oil is likely. Also, there isn't behaving a lot of technology stocks, guys. The people are taking money out. With that said, we are expecting Roku to sell off after the earnings report. Notably, we will mention this, that the report should be rather good, but the stock has tripled in value since the very great report when Roku actually started moving higher from about 60, when it had that move from 60 to 75, and it had another great earnings report right here when it moved from 100, to the 120s. Well, this show is over, okay? Roku will drop after hours. As you can see, we get triple, boom, 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 right here. Triple middle finger action right here. Basically, the stock sells off at much greater volume. Boom, and then when it tries to rally, it goes higher on much lower volume. You got the head and shoulder going on. You got divergency on the outer side. Guys, this thing is likely to initially bounce to 150 and then drop to about 115, 127 level. So this is actually going to be the type of trade along the lines with some of the hesitation and a lot of other technology stocks that we have seen. Some of the other stocks, we have been short-term bullish on some of the cloud stocks, thinking they're going to come out and start buying them. I don't have these charts inserted here, maybe in the next video, but if you take a look at cloud stocks like now, okay, it had some bullish momentum going on for about a week, and now this stock has officially crossed into the death cross formation. So all these signs, guys, there's about, I titled the video 5 signs. There's about 6, 7 definitely really strong signs out there that the market is about to reverse. And here's Roku weekly chart, right? So we got double top now, very close. You got divergence on the RSI. You got diminished volume as the stock recently had a run from 100 to 141. Look what happens to volume. These gray bars, they just keep moving low. We got these similar patterns developing on MACD, and I noticed when this stuff happens, even though nobody looks at the charts the way I do like this, guys, this stuff really works, okay? So check this out if you'd like to learn more about how to utilize charts in a way that nobody else is freaking using them. Click the links below, take out charts, divergence course, so you can trade like a rock star. Now, S&P is likely to move to the area 3,003, 3,015, guys, in the next 7 to 10 days. So nice little pullback, definitely clear signs of the top. And in our 13 markets move formula, we're finally getting some signs that, look, there is a downward trend developing, not to a huge magnitude, because the magnitude of the 13 markets move, we're noticing they're just very, very tiny bit. When we combine it with all these other signs, guys, this makes it for a high probability of a pullback, not a crash, a pullback so far. So get ready to position. Friday could be a huge day. Let's roll, guys. Catch some of these great trades out there. And still bullish on this ecstasy stock from yesterday. Guys, just remember the 2 easy strategies. When something drops and you're bullish on it intraday, buy the DM dip. Okay, just remember that. If you are bearish on something, then short the DM bounce. Let's go.